Hello, very good afternoon to all. I'm Kelvin here again. Welcome to today's Daily Dose of Market Insights. Very good afternoon. Today will be Tuesday, the 18th of February 2025. So as usual, let's have a quick look at the disclaimer first before we dive straight into today's gist of Daily Dose of Market Insights. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a recap what has taken shape yesterday in terms of news flow and or economic data release, the intraday performance on the broad-based cross-asset classes, ranging from yesterday and heading into today's Asia session, before we have a deep dive into the short-term intraday technical outlook on the broad-based cross-asset classes. So we know that yesterday the cash US stock market was closed, so there was a relatively insignificant movement in the major US stock indices CFD products. So I don't want to touch more about that on the performance. But however, what's interesting over here is that during today's Asia session, we start to see a kind of a minor revival of US dollar strength. So the dollar actually recovered slightly. So what we could see over here is that in my chart, let me share with you guys. Okay, so hopefully you guys could see the screen. All right, so what we could see over here is that the dollar, okay, so this is the 5-day rolling performance of the US dollar against other major currency as of now we are speaking. So we start to see there is actually a bit of bounce from the dollar against other major currency. Like the dollar yen is now actually reacting the strongest, but still in negative territory, negative 0.18% by a 5-day rolling performance. So still recall that over here is that in my short-term daily dose yesterday, we do expect a short-term push up in the dollar yen because the hourly RSI is coming very close to the oversold level, and this short-term bounce has managed to take shape, but it didn't surpass that short-term pivotal resistance that we highlighted yesterday. So I'll touch more about that when I cover the short-term intraday technical outlook on the dollar yen, and the rest of the other dollar major pair also starts to shape a bounce as well, together with the dollar Aussie, the dollar euro, the dollar Swiss, and the dollar sterling, which is the weakest right now. Means the dollar is weakest against the sterling, against other major currency, but it starts to form higher lows over here as expected yesterday when I highlighted their short-term intraday technical elements on the various major dollar crosses. And one of the reinforcement that causes this dollar strength to stage that minor bounce into today's Asia session was overnight in the US session. There's this relatively less dovish Fed speak from Fed Wheeler. So Fed Wheeler, he spoke yesterday. He actually favors pausing interest rate cuts in the US until inflation bumps fades. That means he has a thinking or has a view that inflation may be rather sticky, especially what we see in the CPI data that was released last week that came in much more higher than expected over here. So what we could see over here is that we know that several Federal Reserve officials have started to sway towards the less dovish spectrum, and if inflation doesn't subside and the Trump trade tariffs continues to play out with more reality, that means right now we know there is trade tariffs. Trump wanted to do a deal, so he actually has a very big talk about he wants to impose XYZ percentage amount of tariffs against US major trading partners. But however, he dialed back saying that there will be room for negotiation. But what if the negotiation fails and the trade tariffs indeed went through, especially the 25% tariffs on Canada, Mexico, and ongoing is China by 10%. And if that continues to dial up by another 20%, tit for tat measures for sure will come in. That means major trading partners with US start to impose their tariffs on US products. That eventually will start to see higher cost of inflation spiraling back into the US economy. So that causes this particular Federal Reserve officials to be more reserved in the dovish outlook on the Fed funds rate cut that is still ongoing, and he prefer to actually pause rate cuts at this juncture. So that also support that or reinforce that expected minor dollar strength bounce that we emphasize or that we have a view on based on yesterday's short-term intraday technical outlook from that. And on top of that, another positive, no, say, another news flow that is also supporting this ongoing rally in the major Hang Seng stock indices. So view Hang Seng indices as a proxy for international investors to get easier exposure to the China stock market via the Hong Kong exchange gateway or the Connect gateway. So if you look at the major Hang Seng indices as of today, we are speaking right now, all of them continues to rally very strongly. The Hang Seng index up by 2%. The higher beta Hang Seng Tech is up by 3%, and the HSCI, the H shares, that means i.e. A shares listed on the Hong Kong Stock Exchange, is up by 2.15%. And this ongoing positive feedback loop has been pretty much driven by that is highly anticipated that the China top leadership will direct the private sector in China to have a better put away a better leeway of freedom to run their respective business model due to the meeting where presidency had with the various top leadership of China private sector yesterday, especially the China big tech CEOs, where Alibaba CEO Jack Ma has been suddenly being out of cold storage. So we know that Jack Ma recent the last 4 or 5 years he was being put on cold storage due to his diverging views between Alibaba himself and the top leadership of China. And apparently that this particular frosty relationship with Alibaba, i.e. One of the key China big tech players in the platform industry, the relationship has started to get less frosty with China top leadership. And now, based on yesterday's meeting with presidency himself, chaired this meeting with the leadership of various key private sector company in China, that actually indicates or imply that the top leadership right now is reverting back to not talking about common prosperity again, but back to more entrepreneurship mindset that is required to get China out of this ongoing deflationary risk spiral. So that actually also causes a boomerang positive feedback loop right into the China stock market, eventually into the Hang Seng indices as well, which we have been have a short-term intraday bullish bias since 3 weeks ago. All right, so later I'll touch on what are the key levels to watch on the Hong Kong 33 CFD index, which represents the Hang Seng index thereafter. All right, later on. And also another news flow that is more pertaining to the Australia economy will be RBA. So RBA, as expected over here, let me highlight to you guys. As expected, RBA finally cut its cash policy rate by 25%, 25 basis point for the first time in 4 years. And we know that RBA is the lagging major developed central bank that has yet to kickstart its interest rate cut cycle, excluding Bank of Japan, because they are in a different, we call it economy, whereas Bank of Japan finally managed to actually get out of its deflationary risk spiral that has been trapped for decades and is on the pace of normalization. Whereas the Australian economy last year, there is some bright spots, and due to the fact of elevated inflation risk as always being portrayed by the new RBA Governor Bullock, she refused to cut interest rate last year, and finally she decided to throw in the towel this time around. And I think a 25 basis point cut, which is widely expected. And even based on the short-term interest rate swap market in Australia, market participants are still pricing potentially two more interest rate cuts of 25 basis point each that may come in the later part of 2025. So what we could see over here is that Bullock itself, just ago concluded her press conference. She actually stated that the decision does not imply further rate cuts. So that actually kind of dampen the future interest rate dovishness as being implied by the market participants towards RBA in the next couple of months. So what I could see over here is that Australian stocks actually extended drop. They're actually down by negative 0.8% because of this rather hawkish tonality as being portrayed by RBA governor during her press conference over here. But what's interesting over here is that her press conference doesn't gel in line with the latest forecast as being released by RBA itself, because today, on top of the RBA decision, they also release future inflation trend forecast as well. It's very similar to the Fed dot plot that they tend to release on the quarterly basis. So what I could see over here is that yes, Bullet mentioned about remaining cautious because her stance that the fight to inflation is not yet over here. Uh, that She said that why RBA cut given that inflation is still outside the target range. Bullet reiterates that the board still believes interest rates are in restrictive territory and monetary policy operates with a lag. So what's interesting over here is that she maintains a hawkish tone that is in contrast with RBA latest inflation forecast that is released together as well, together with the 25 basis point cut today. So let me expand my screen so that you guys could have a better view of the chart. Okay, hopefully this is large enough. Okay, so take a look here. So this is the latest growth, unemployment, and inflation forecast. All right. So what we could see over here is this. The bracket one is the previous forecast. The top one is the latest forecast. So okay, so 2024 is more or less been not so concerned. Market is more concerned about half yearly, ended June 2025 and December 2025. So previously, the growth forecast for mid-year end was 2.3%. This time round, they reduced it to 2%, which is indicate a slowdown in growth, which i.e. that's why explain to us why RBA decided to cut today. And they expect to recover by year end by 2.4%, slightly higher than previous forecast of 2.3%. All right. And over here, what you could see over here is that the unemployment over here previously was also reduced from 4.4% to 4.2% half year by June 2025, and by year end 4.2% from 4.5% that was previously forecasted. So what you could see over here is that they don't expect the labor market to fall off the cliff, and also they also expect inflation, trim mean inflation. This one is more important because trim mean inflation is excluding the volatile food and energy item. They expect it to actually slow down from 3% that was previously forecasted to 2.7% by end June 2025, and by year end 2025 they also expect it to maintain stable at 2.7%, but a slower bit for previously forecasted at 2.8%. So what it means over here is that the RBA as a whole do not expect inflation to re-accelerate again. So that actually comes a bit of a contrast with that just concluded press conference by RBA governor, who sounded much more hawkish than what is being implied by the latest trim mean inflation forecast as depicted over here. So later I'll touch on the Aussie dollar cross pair, and as well the Aussie dollar pair, the major pair, and as well as one cross pair called the Aussie Kiwi. Why Aussie Kiwi? Because Aussie Kiwi is very interesting. We know that RBA has already cut by 25 basis point, and market now expect RBNZ, which is the New Zealand Central Bank, to be much more dovish than RBA, because the economic of affairs in New Zealand is at a weaker footing compared to Australia. So later I'll touch on the FX cross rate of Aussie versus Kiwi from a technical standpoint. All right. So yes, these are the key data, and we call it movement that impact the FX market. All right, so now let us now touch on the intraday technical outlook on the various cross asset classes. But before that, let me expand my screen before I touch on the euro dollar so that you guys could have a better view on the charts itself. All right, so now let us touch on the euro dollar. So the euro dollar yesterday, if you recall, we do have a bearish bias. looking for a minor pullback, and the minor pullback scenario did play out as expected below the short-term pivotal resistance of 1.0530. So what you could see over here is that price action now has really slid down to test the upper limit of our first support level, as per highlighted yesterday as well, at 1.0460 slash 1.0440. So we will still maintain the short-term pivotal resistance level at 1.0530, because we do not want to put it so tightly, because just in case of any whipsaw, because it hasn't broken below the 1.0460 slash 1.0440 level. But we do have a first near-term resistance to watch as we head into the start of the European session that is going to be open soon at around 2 hours time from as we are speaking. So the first resistance level to watch will be this minor congestion area over here at 1.0 1.050 level, 1.048, pardon me, 1.048. As long as any bounce didn't surpass above 1.0530, which was yesterday's short-term pivotal resistance that we highlighted, we'll still maintain that intraday bearish bias for today on the euro dollar. A breakdown below 1.0440 exposes the next near-term support level at 1.0360. We also confluence with the closely with the 20-day and the 50-day moving average, acting as a next near-term support level as well. However, hourly close and the breakout above 1.0530 will invalidate today's intraday bearish bias on the euro dollar to see a squeeze up towards the next intermediate resistance level at 1.0565, followed by 1.060 level, which is the minor swing high area of 19th of November, 20th of November, and 6th of December last year. Now, what's up on the sterling dollar? So the sterling dollar also continues to inch down lower, but at a slower pace compared to the euro dollar. So still using the 1.2670 as my short-term pivotal resistance level. Very clearly now we start to see a bearish divergence that is taking shape over here. Bearish divergence, price action shape a higher, similar high during the end of the US session. And right now we see another breakdown of another parallel trend line support level over here. Okay, there's a bearish breakdown indicating more evidence of short-term intraday bearish momentum has started to surface on the sterling dollar pair. Right, so with that, still maintaining the intraday bearish bias for that minor pullback scenario to take shape, using 1.2670 as my short-term pivotal resistance level. First near-term support level to watch, 1.2540. Only a breakdown below 1.2540 potentially open up scope for a deeper minor pullback scenario to expose the next near-term support level at 1.2480. We also confluence very closely to the 50-day and the 20-day moving average, I think as a similar support level at 1.2480 as well. Only a push up and an hourly close above 1.2670 will invalidate today's intraday bearish bias to see a squeeze up to target the next near-term resistance zone at 1.2780 slash 1.2810, which also confluence with the 200-day moving average, the 1.236 Fibo extension from the low of 13th of January, and as well as the graphical minor swing high area of 6th of December and 12th of December last year. So that's for the sterling dollar. So now what's up next on the Aussie dollar? So the Aussie dollar, what we could see over here is that it almost pardon me, the Aussie dollar, it starts to actually traded sideways. Yes, yesterday there was a slide that what we expected, almost hit the first support level at 63.33, printed a current intraday low of 63.34, give or take only 4 pips away. So but price action still remains rather lackluster, where the bulls can't able to actually stage a breakthrough above the current intraday high of 63.67 that was printed on the outcome of RBA monetary policy decision at 11 a.m. where market is expecting a cut. So despite a rather hawkish RBA Governor Bullock's speech just a while ago, but price action still can't break above this current intraday high of 63.68. Okay, 63.68 round up, where we see the release of that RBA monetary policy decision of a 25 basis point cut. So this will be my first resistance level to watch, 63.68, but for sure the pivotal resistance still remains at 64 figure level, which is important. Why is it important? Because if you go to the daily chart again, it's in fact that former major triangle like range support level that was in place since the low of 13th October 2022, broken down on 11th December, now turns into a key major pullback resistance level at 64 level. So 64 figure level will still be my pivotal resistance for today to maintain that intraday bearish bias for a minor pullback signal to take shape. But price action got to break down fast below 63.30 before exposing 63 figure, followed by 62.70 next, which also confluence with the 20-day and the 50-day moving average, acting as a similar resistance level at 62.70 pretty much closely. Only a push up and an hourly close above 64 figure short-term pivot the resistance that we have for today will invalidate today's intraday bearish bias to see a squeeze up towards the next resistance level at 64.30, followed by 64.70, which is the minor congestion area of 4th of December and 10th of December last year. So no change for the Aussie dollar, using 64 figure as my pivotal resistance to maintain that short-term intraday bearish bias, but price action got to break down fast below the 63.30 figure level for to allow the potential bears to gain more traction in order for the minor uh, pullback scenario to play out on the Aussie dollar. Now, what's up next? Lastly, will be the dollar yen. Still recall that I remember I mentioned to you all dollar yen, we do expect a push up, and this push up right now indeed takes place. And right now, what happened is it's coming very close to the 200-day moving average, and also right below the 15280 short-term pivotal resistance, which we highlighted yesterday, where we will still maintain the intraday bearish bias. So right now, price action has indeed staged that minor push up, is coming very close to 52.80, and you realize that the last 2 hours of candlestick has starts to form into a rather small spinning top candlestick on an hourly basis, representing a bit of exhaustion on this earlier push up during the start of today's Asia session. So no change, that 15280 will still be our short-term pivotal resistance level to maintain our intraday bearish bias in any potential bounces, as long as it didn't surpass above 15280 short-term pivotal resistance level. First support level to watch will be the zone 15095/70. A breakdown below 15970 potentially exposes the next near-term support zone of 14965/30, which is the 1.236 Fibo extension of this ongoing Fibo minor or minor downtrend phase that is still intact from the high of 10th of January this year, and also the lower limit of this minor descending channel that is in place since the high of 10th of January. Only a hourly close and a push up above 15280 will invalidate today's bearish bias to kickstart a mean reversion rebound, exposing the next near-term resistance in first step at 15370, which also correspond to the downward sloping 20-day moving average, and very closely the minor descending channel upper limit or its resistance as well. A breakout above 15370 potentially see a much more pronounced minor mean reversion rebound to retest the 50-day moving average, confluencing at the next resistance zone at 15450/155 figure level. Okay, so that's for the dollar yen, using 15280 to maintain that intraday bearish bias in any potential bounces. Okay, now next up will be the short-term intraday technical outlook on the major stock indices, starting with the Hong Kong 33 representing the Hang Seng Index. So the Hang Seng Index goes to pierce up as expected, pierce above our first resistance level, which we highlighted yesterday at 22,830, coming very close to the second resistance at 23,120/270, and also the upper limit of this ongoing steeper minor ascending channel that has been in place now since the low of 3rd of February. Yes, RSI now is at the overbought level, but there's no signs of a bearish divergence. There is no clear bearish divergence as it continues to shape higher high in line with the price action on the Hang Seng indices or the Hong Kong 33. So with that, yes, there could be some form of a minor pullback taking shape right now as it's approaching the resistance of 23,120/23,270. Pullback level to watch will be 22,830 maximum, which is our Titan short-term pivotal support level that we have for today, 22,470. We also correspond to the lower limit of this steeper minor ascending channel from the low of 3rd of February. So as long as the minor pullback didn't surpass below 22,470, we will still maintain that intraday bullish bias on the Hong Kong 33 to see the continuation of this impulsive up move sequence. Next resistance level to watch out will be at 23,830, which correspond to the 0.764 Fibo extension level. All right, taken from the low of 23rd of January. Only hourly close below 22,470 and a breakdown below it invalidate today's intraday bullish bias to potentially kickstart a minor mean reversion decline scenario, exposing the next near-term support level at 22,130, followed by 21,630 slash 21,295 level. All right, so that's for the Hong Kong 33 using a Titan short-term pivotal support level for today at 22,470 to maintain that intraday bullish bias. Onwards, next will be the Japan 225 representing the Nikkei 225. So yesterday we do have a neutrality stance on the Japan 225 as it continues to trade below the 20 and the 50-day moving average, and right now it broken above the upper limit of yesterday neutrality zone, which is the 20 and the 50-day moving average as well at 39,250. So 39,250 will be my first support level to watch in any form of a minor pullback that may take shape right now at this juncture. Why? Because the hourly RSI it has already hit the overbought level and is now has exited the overbought level. So that could be a form of minor pullback taking shape. First support level to watch will be 39,250. Maximum will be at 39,050. So that will be my short-term pivotal support level I have for today, which is the minor swing low of last Friday and yesterday's Asia session. So as long as this pullback didn't surpass below 39,045, we will still maintain our we will flip to an intraday bullish bias within a medium-term sideways range configuration. Next near-term resistance zone to watch will be 39,710 slash 830. Above it potentially sees 39,990, which is the minor congestion area of 23rd of February, January and 24th of January, and also a Fibo extension cluster in this ongoing push-up. As I projected from here, push it down to yesterday's Asia session low, that also correspond to the 0.76 Fibo extension as well. Only hourly close below 39,045 will invalidate today's intraday bullish bias to see another choppy decline move back towards the lower limit of the sideways medium-term sideways complex range configuration in first step, exposing the next near-term support level at 38,770, which correspond close to the 200-day moving average. A breakdown below 38,770 sees the minor swing low area of 3rd of February and 7th of February coming in as the next near-term support level at 38,380. All right, so that sum up the intraday technical outlook for the Japan 225. Next will be the European stock indices, which is the German 30. So the German 30 continues to define our expectation. So yesterday we do expect a minor pullback below 22,600, but that pullback didn't take shape and it can't break below last Friday low after a test close to it before shaping that bullish breakout, that minor bullish breakout yesterday. So with this minor bullish breakout yesterday, this ongoing impulsive up move sequence we got to respect. The RSI, there is no signs of a bullish exhaustion. Yes, but that's overbought. But price action didn't shape a lower high. There could be some form of a minor pullback taking shape during the start of the European session. So first minor pullback support level will be here with this long bullish candle. Now turns into a pullback support level, the pullback candle high at 22,710. As long as the pullback didn't surpass above yesterday's range resistance breakout, now turns into a key pullback support area at 22,600. So 22,600 will be my short-term pivotal support level for today to flip back into a intraday bullish bias for the German 30. First resistance level to watch will be at 22,930 slash 23,030. Above it sees the next resistance coming in at 23,110. 30, which is being defined by the 0.618 Fibo extension taken from the low of February. Only a hourly close and a breakdown below 22,600 will invalidate today's intraday bullish bias to kickstart a minor mean reversion decline scenario in the first step, exposing the next near-term support level at 22,460, followed by 22,310 next. So i.e. Using a short-term pivotal support at 22,600 to hold any chance of a minor potential pullback, given that the RSI already hit the overbought level. And as long as this 22,600 is not surpassed to the downside, we will flip back to a intraday bullish bias for the German 30. All right, so now what's up next on the major US stock indices? So we know that the cash market for the US stock market is closed yesterday for public holiday. So rather not much key movement on the futures market as well. So that actually explain the US Wall Street 30 continues to be trapped inside this sideways range configuration. Despite yesterday, last Friday push up, but it can't break above this minor descending trend line that is in place since 31st of January. So still no change, still maintain a neutrality stance on the US Wall Street 30, remain neutral for today at 44,840 upper limit, and the lower limit will be 44,190. All right, onwards, next will be the NZD 100. So the NZD 100, yesterday it did a minor pullback, and during the Asia session, it managed to bounce right exactly at the 22,135 first support level that we highlighted yesterday. So this 22,135 was a former fresh all-time high that was printed during this 17th of December swing high. Right, so as long as any form of minor pullback this surpass below 21,970, so this will still remains the short-term pivotal support that we have for today. We will still maintain the intraday bullish bias on the NASDAQ 100. Next resistance level to watch will be 22,360/410, which is being defined by a Fibo extension cluster level. Only a breakdown below an hourly close below 21,970 will invalidate today's intraday bullish bias and also invalidate last Friday bullish breakout from this dotted green line here, which was the former medium-term trend descending trend line resistance previously in place since 16th of December high that was previously taken out on last Friday. So with the breakdown below 21,970, that would increase the odds of a failure bullish breakout by exposing the next near-term support level at 21,845. Excuse me. A breakdown below 21,845 sees the next near-term support coming in at 21,680, which correspond to the rising 20-day moving average. So that's for the NASDAQ 100, still maintaining the intraday bullish bias as long as any minor pullback didn't surpass below 21,970 short-term pivotal support that we have for today. So with that, that sum up the intraday technical outlook on the major stock indices. Up next, let us focus on the commodities market, starting with gold XAU/USD. So for gold XAU/USD continues to remain firm above our 2,880 short-term pivotal support level, and now it starts to trace up a series of a pair of higher low as well over here. So with that, our first support level to watch out for today was yesterday's breakout here over here. So we have 1, 2, 3, 3 hour of Asia session close above this former minor range resistance here at 2,903. Now turns into a first support level to watch, but key short-term pivotal support still remains at 2,880. Very clearly it tested 1 time, 2 time, and 3 time. All right, before can't break below it. So 2,880 short-term pivotal support to maintain the intraday bullish bias on gold XAU/USD. No change. First resistance to watch will be the current all-time high area here at 2,940/945. Only a breakout above 2,945 potentially sees a reacceleration on the upside to expose the next near-term resistance, which has been defined by a Fibo extension cluster level 2,990/3000, which is the psychological level as well. Only a push down with an hourly close below 2,880 will invalidate today's intraday bullish bias to kickstart a minor mean reversion decline or pullback scenario, exposing the next near-term support level at 2,845. we also correspond to the rising 20-day moving average and the former minor ascending channel support from the low of 31st of December. A breakdown below 2,845 potentially see a steeper minor pullback scenario occurring, exposing the next near-term support level next at 2,812/795. So net overall, still using 2,880 as my short-term pivotal support level for today to maintain that intraday bullish bias for spot gold XAU/USD. So lastly will be the West Texas crude oil. So West Texas crude oil yesterday we flipped into a bullish bias because looking for a potential minor bounce scenario to take shape, and the minor bounce scenario indeed starts to evolve over here. The RSI is getting more positive. Firstly, we see a bullish divergence, and right now there is a bullish breakout and a retest of it during today's Asia session from this former parallel descending trend line over here. So with that, we will still continue to maintain our intraday bullish bias for West Texas crude oil for that mean reversion rebound scenario to continue to play out, using 70-60 as a short-term pivotal support level, maintain the intraday bullish bias for this minor mean reversion rebound scenario. First resistance zone to watch out for will be 72.50/90. Only a breakout above 72.90 exposes the next near-term resistance zone at 73.90/74.67, which confluence with the 200-day moving average, acting as a same resistance level as well. Only a hourly close and a breakdown below 70.60 will invalidate today's intraday bullish bias to see the impulsive down move resuming for West Texas crude oil. In first step, exposing the next near-term support level at 69.80, followed by 68.80, which is the minor swing low area of 11th of December and 20th of December. All right, so that sum up the intraday technical outlook on West Texas crude oil, and as well as the intraday technical outlook on the broad-based cross asset classes. So before we go, let's take a look at the economic calendar on the key data to look out for today and events. So after RBA interest rate decision at 3 p.m. Singapore time, that may impact the sterling dollar and the sterling crosses, will be UK job data, the unemployment rate, and the employment change, that both out at 3 p.m. Singapore time. And thereafter, we have Bank of England Governor Bentley's speech, which will potentially impact the sterling dollar and the sterling crosses as well. That will be at 5:30 p.m. Singapore time. Next will be the ZUI Eurozone Economics ZUI Sentiment Index for February. Markets expecting a further uptick to 24.3 from 18 that was printed in January. That will be up at 6 p.m. Singapore time. That may impact the euro dollar, the euro crosses, and even the German 30 DAX as well. At 9:30 p.m. Singapore time, for those who have interest in the dollar Canada, the Canada dollar, the dollar against the Canada, or the Canada crosses, Canada inflation rate will be up at 9:30 p.m. Singapore time. Then thereafter, we have a rather quiet US session in terms of economic data release until 11:20 p.m. We have another Fed official speaking. Fed Daily will be speaking at 11:30 p.m. Singapore time. And also stretching up into the early Asia session at 2 a.m. Singapore time tomorrow, Wednesday, another Federal Reserve official speaking, Fed bar speech at 2 a.m. Singapore time. And with that, from here, we do have 9 a.m. the important RBNZ interest rate decision that could impact the cross rate of the Aussie dollar from here as well. And at 9:30 a.m. we have the house price index from China that could potentially impact the Hong Kong 33 index over here. So before we go, I forgot to actually share with you one FX cross over here. So this FX cross that I want to mention is more on the Aussie Kiwi pair, which I forgot to share earlier on. So this is the Aussie Kiwi pair over here. So the Aussie Kiwi pair is very bullish right now because of a much more rather state of the economy. The Australian state of the economy is much healthier than Kiwi. So by right, technically speaking and fundamentally speaking, RBNZ could be much more dovish tomorrow as compared to RBA. So that causes the Aussie Kiwi cross pair to be very bullish right now. staging off a bounce that from the lower limit of that minor ascending channel that is in place since 31st of January. This is the hourly chart. So right now the hourly RSI has already hit the overbought level, so there could be some form of a minor pullback taking shape. So this minor pullback, first support level to watch out for right now as we head into the European session will be 111.15. As long as this minor pullback didn't surpass below 111 figure, which is our short-term pivotal support level that I have for today on the Aussie Kiwi FX cross pair, potentially the next near-term resistance level to watch out for the Aussie Kiwi may come in at 111.65, followed by 111.90 next, which is the upper limit of this minor ascending channel. Only a breakdown with an hourly close below 111.0 will invalidate today's intraday bullish bias on the Aussie Kiwi to see it floating down to retest 110.80. Below 110.80 may see a minor mean reversion pullback or decline scenario unfolding, exposing the next near-term support level at 110.45, followed by 110.10 next, which is the minor swing low of 29th of January and 31st of January. All right. So with that, that sum up today's intraday. That sum up today's daily dose of market insights. I'm Kelvin here, signing off, and I wish you all a great day ahead. And we shall speak again tomorrow. Thank you.